So hi everyone, it is Friday the 2nd of October 2020 and the Twitterverse is all kind of up in arms about the fact that President Trump, the First Lady Melania have now come down with coronavirus according to their statements. And so the question is what this video is about is kind of how can we reasonably expect the markets to react to that? Okay, so first of all, regardless of this, or putting this aside for the moment, the markets were very much overextended. The NASDAQ is almost parabolic. It's very much overdue for a big correction. The S&P and the NASDAQ could do with a couple of weeks, just a few weeks of taking a break, just letting off some steam before resuming the longer term or returning to the current bull market trend. And so that's my expectation, is that is something that could be triggered by anything, and it might be triggered by this. If there is a bit of panic, yes, gold might continue to climb. I still think gold is ideally going to stay in place until the moving averages, the true value catches up with it. True value currently for gold sits closer to 1800 or maybe 1650. But if the true value, if it stays where it is and it just treads water, then the true value will come up to meet it and then it can resume. So it's either going to tread water or potentially head a little bit lower. It looks like it wants to carry on up, but I'm not convinced that it really has enough potential to do that. Oil is already weak anyway, so seeing oil tank within its longer term prevailing trend is down anyhow, so that also makes sense. So the markets look as though they're pretty much just going to continue doing what they're doing. But where it gets really interesting is that, so there's a couple of scenarios that happen here. So first of all, America is effectively vulnerable to attack. That's a reality. As far-fetched as it might seem, they're vulnerable to a political attack or from outside the US, from US enemies. And so that's a possibility. So this depends on actually how ill Trump actually turns out to be. He's going to get the best medical care, so he should actually probably be fine. And also, what I also find interesting is that statistics came out yesterday showing that 37% of all the misinformation and disinformation about coronavirus came from one person on the planet. So out of nearly 8 billion of us, one person was spreading more than a third of the misinformation about coronavirus, all right? And that was Trump. So he's got influence, he definitely has influence. And so it is possible that now, if he's sick, there could be a surge suddenly in investment in coronavirus, in solutions for that, whether that's medical care or whether it's this. So that's kind of interesting in terms of stocks and equities. There could be a boost in those areas because suddenly a whole lot of people are inspired. Holy cow, I need to get a slice of that. Or there's a demand for it, and the demand increases as a result of a portion of the global population as well as Americans going, oh my God, this is a real thing, we need to take it seriously. And so then there's a bit of a demand and it increases. That's a possible scenario. As I said, and that's outside the technology sector predominantly. I mean, it would be in terms of ventilators as technology, but outside of that. So anyway, so basically I think to sum up is that the systems in the markets tend to tick over pretty much as they do anyway. I don't think that they live and breathe on the president's health generally. I think they've probably taken that into account. They've taken a lot of coronavirus. I think they're already twitchy and they were already overvalued. So if they do correct, then that's what it took to get them to correct. And otherwise, I think that we're still currently within that larger bull market. And so until we see that monthly or weekly trend change significantly, that's the case. But we are due for a correction. So I think that we're looking at a scenario potentially here where we might see the markets take a bit of a hit or let off some steam for a couple of weeks, maybe even a couple of months. And then potentially as we run into that Santa rally towards Christmas, which usually happens to January as well. Normally Q1 can be quite nice and bullish. And so we should potentially keep in mind that even this time last year, we saw the markets have quite a correction. And then January, they just became incredibly bullish. So from a technical factor, there isn't anything that's a big surprise here.